The term petrodollar may sound complex, but it represents a simple yet powerful concept: the dominance of the US dollar in the global oil trade. This dominance is not just a matter of convenience, it is a cornerstone of the global financial system. Since the 1970s, oil, the lifeblood of the global economy, has been primarily bought and sold using US dollars. This practice began when major oil-producing countries agreed to price their oil in dollars, creating a standard that has persisted for decades. This arrangement has bestowed upon the United States significant economic and political leverage on the world stage. The ability to control the currency in which oil is traded means that the US can influence global economic policies and maintain a strong position in international affairs. It has allowed the US to enjoy lower borrowing costs and exert influence over international transactions. Countries around the world hold large reserves of US dollars to facilitate oil purchases, which in turn supports the value of the dollar and the US economy. However, the future of the petrodollar is increasingly uncertain. The global economic landscape is shifting, and with it, the dynamics of oil trade and currency dominance. Several factors are converging to challenge the dollar's long-standing dominance in the oil market. Emerging economies are seeking to trade oil in their own currencies, and technological advancements are changing the way energy is produced and consumed. The petrodollar system is more than just a means of payment for oil. It represents a complex web of economic and political relationships that have far-reaching implications for global stability and power dynamics. It represents a complex web of economic and political relationships. These relationships are built on mutual dependencies and strategic interests that go beyond mere financial transactions. Understanding the petrodollar is crucial to grasping the dynamics of the global economy and the balance of power in the world today. It is a key factor in international relations, influencing everything from trade agreements to military alliances. As we navigate an era of geopolitical shifts and technological advancements, the petrodollar's future will undoubtedly shape the global landscape for years to come. The evolution of this system will be a critical factor in determining the economic and political order of the future. The story of the petrodollar begins in the aftermath of World War II. The world was in ruins, and nations were desperate to rebuild their economies and establish a new global order. The Bretton Woods Agreement of 1944 established the US dollar as the world's reserve currency, pegged to gold. This agreement was a cornerstone in the creation of a stable international monetary system. This system ensured stability and facilitated international trade for decades. Countries could trade with confidence, knowing that the US dollar was backed by gold, which provided a sense of security and predictability in global markets. However, by the early 1970s, the Bretton Woods system was under strain. The economic landscape was changing rapidly, and the fixed exchange rate system was becoming increasingly difficult to maintain. Rising inflation in the United States and a growing trade deficit led to concerns about the dollar's stability. The US was importing more than it was exporting, and the demand for gold was outpacing the supply. In 1971, President Richard Nixon took the US dollar off the gold standard, effectively ending the Bretton Woods Agreement. This move, known as the Nixon shock, sent shockwaves through the global economy. The world entered a period of monetary uncertainty. Exchange rates began to fluctuate, and countries had to navigate a new financial landscape without the anchor of gold. To stabilize the dollar and maintain its global dominance, the US struck a deal with Saudi Arabia, the world's largest oil producer. This strategic alliance was crucial for both nations. The agreement was simple yet profound. Saudi Arabia would price its oil exclusively in US dollars and invest its surplus oil revenues in US Treasury securities. This created a new demand for the US dollar, reinforcing its position as the world's reserve currency. In return, the US would provide military protection and support to Saudi Arabia. This mutual arrangement ensured the security of the oil-rich kingdom and solidified the US's influence in the Middle East. This arrangement, formalized in 1974, marked the birth of the petrodollar system. It reshaped the global economic landscape, intertwining the fortunes of oil and the US dollar in a way that continues to impact international relations and financial markets to this day. The petrodollar system has served the US and its allies well for decades. However, several factors are converging to challenge its supremacy. These challenges are multifaceted, encompassing economic, political, and technological dimensions. The rise of alternative currencies, particularly the euro and the Chinese yuan, poses a significant challenge to the petrodollar. The Eurozone is a major economic bloc, and the euro has gained traction as a reserve currency. Similarly, China, the world's second-largest economy, is actively promoting the yuan's internationalization. Several countries, including Russia, China, and India, have already started using their own currencies or exploring alternative payment mechanisms for oil transactions. This shift away from the US dollar is driven by several factors. Some countries seek to reduce their dependence on the US dollar and diversify their foreign exchange reserves. Others are motivated by geopolitical considerations, aiming to reduce the impact of US sanctions or challenge US hegemony. The increasing use of alternative currencies in oil trading erodes the petrodollar's dominance and weakens the link between oil and the US dollar. Geopolitical tensions and shifting alliances further threaten the petrodollar's future. The relationship between the US and Saudi Arabia, the cornerstone of the petrodollar system, has become increasingly strained in recent years. Disagreements over oil production levels, the war in Yemen, and the murder of journalist Jamal Khashoggi have strained ties between the two countries. Meanwhile, Russia and China, both seeking to challenge US global leadership, are actively working to undermine the petrodollar system. They have established alternative payment systems, such as the Chinese Cross-Border Interbank Payment System, CIPS, to facilitate trade in their own currencies. The growing geopolitical rivalry between the US and its rivals is creating a multipolar world order, where the US dollar's dominance is no longer guaranteed. Technological advancements, particularly in the realm of digital currencies and blockchain technology, are poised to disrupt the global financial system, including the petrodollar. Cryptocurrencies such as Bitcoin and Ethereum offer a decentralized and potentially more efficient alternative to traditional fiat currencies. Blockchain technology, the underlying technology behind cryptocurrencies, has the potential to revolutionize international payments by enabling faster, cheaper, and more secure transactions. While cryptocurrencies are still in their infancy and face regulatory hurdles, their emergence represents a potential long-term threat to the petrodollar system. If cryptocurrencies gain wider acceptance and become more integrated into the global financial system, they could erode the dominance of the US dollar in oil trading and other international transactions. This shift could have profound implications for the global economy and the balance of power. A crash of the petrodollar would send shockwaves through the global economy. The petrodollar system, which has been a cornerstone of global finance since the 1970s, ties the value of oil to the US dollar. This system has provided the US with significant economic advantages, including lower borrowing costs and a strong international demand for its currency. The US economy in particular would likely experience significant repercussions. The financial markets would be among the first to feel the impact, with stock prices plummeting and investor confidence eroding rapidly. The interconnected nature of global finance means that these effects would not be contained within the US, but would ripple across the world. As the demand for US dollars declines, the value of the dollar would likely plummet. This depreciation would have far-reaching consequences, affecting everything from the cost of imports to the value of savings held in US dollars. The reduced purchasing power of the dollar would make it more expensive for Americans to buy foreign goods and services. This devaluation would make imports more expensive, potentially leading to inflation. Everyday items, from groceries to electronics, would see price hikes, squeezing household budgets and reducing disposable income. Inflation could spiral out of control if not managed properly, leading to a cost-of-living crisis. Moreover, the US government's ability to finance its massive deficits by issuing debt in its own currency would be severely curtailed. The loss of confidence in the dollar would make it more difficult and expensive for the government to borrow money, potentially leading to higher taxes or cuts in public spending. This could lead to higher interest rates, making it more expensive for businesses and consumers to borrow money, potentially stifling economic growth. Higher borrowing costs would discourage investment and spending, leading to slower economic activity and potentially triggering a recession. The decline of the petrodollar could also erode the United States' geopolitical standing. The petrodollar system has been a key element of US influence, allowing it to project power and maintain strategic alliances. Without this leverage, the US might find it more challenging to assert its interests on the global stage. As the demand for US dollars declines, so too would US influence on the world stage. Countries that have traditionally relied on the dollar for trade and reserves might seek alternatives, reducing the US's ability to shape international economic policies and agreements. Other countries may be less willing to hold US debt or use the dollar for trade, diminishing the US's ability to shape global economic policy. This shift could lead to a more multipolar world, with other currencies and economic powers rising to fill the void left by the dollar's decline. The end of the petrodollar era could mark a significant shift in the global balance of power. As new economic alliances form and alternative currencies gain prominence, the geopolitical landscape would be reshaped, potentially leading to a new era of international relations and economic policies.